off quite a fair bit is Asian Paints after that one-off that came by in the PAT. Irrespective of that, at least on the bottom line, the numbers have managed to miss the estimates by a huge margin, although the top line looks largely in line. But Rabinder is here to tell us more about how Asian Paints' quarterly performance was. Rabinder?
Well, as Asian Paint has announced its Q4 number and company reported a revenue at rupees 8,330 crore, which was down by 4.5% on a yearly basis. And if we talk about net profit, then net profit also saw a sharp decline with exceptional loss of 183 crore in Q4. Company reported EBITDA at rupees 140 crore, which was down by 16% on a yearly basis. So PAT and EBITDA was below the street estimate and revenue was largely in line with the street estimate. So overall, Asian Paint Q4 number was not that good. And if we talk about a decorative paint business in India, their registered a volume growth of 1.8%. And if we talk about segmental performance and the international business, in international business, sales decrease in Q4 by 1.5% on back of currency devaluation in Ethiopia, Egypt, and macroeconomic challenges in Bangladesh. And if we talk about home decor businesses, then the home decor businesses saw muted performance in Q4 FY25 with pressure on the household disposable income. And company's industrial business saw growth of 6.1% in Q4 FY25. So, and lastly, and commenting on the result, Amit Singhal, CEO and MD of Asian Paint, said that the overall macro environment remain uncertain, and they are cautiously optimistic about a recovery in the demand condition. And lastly, demand for decorative coating was only marginally better than the third quarter. So overall, a weak set of number of Asian Paint in Q4.
Absolutely. Thank you so much for that, Ravinder, for getting us the highlight of the numbers for Asian Paints. Definitely a subdued quarter coming in, much lower than what was anticipated by the street. The stock is taking a knock about 1.5% at this point in time. We have Sandip Sabharwal joining on the show. A very good afternoon to you, Sandip. And let me just talk about Asian Paints with you. Yes, the numbers are much below than what we were anticipating. And the fact that their businesses have not performed well, which means the competition right now is eating into the business.
So I think this has been expected for the last 3-4 years that competition will come in and margins will get squeezed for the paint industry, and that's played out. And I think Opus has taken away some market share. They have induced price competition, and as a result, we've seen that the value growth is less than volume growth. Now, to look at things going forward, my guess is that we are now coming to a stage where the worst of the impact on profitability of competitive intensity seems to be getting into the price. And depending on how the company performs from here on. So I would think downside from here is limited. Pace of recovery will depend on the pace at which profitability sustains and stabilizes and volumes improve. But I think on risk reward, now after a period of 3-4 years, we are now coming to a stage where, as a contrarian investor, one could start evaluating investing in this stock.
So, as a contrarian investor, you can look at look at buying Asian Paints at this point in time, right? Just correct me if I'm wrong. Is that what you said?
Yeah, now and spread it over a few weeks. So because the market scenario is also such that it's better to spread and buy, because it's not that this stock is going to run away very fast very soon.
Sandeep, I also want to talk about the overall market, because right now, after some statements coming in from the Defence Ministry, you've seen a sudden spike in the VIX. The market has taken a sudden fall. Sure, we've been consolidating also for the last 3-4 odd days. But do you think the market could get susceptible and sensitive to Operation Sindoor?
Yeah, so it depends on the speed and pace of escalation and how it gets resolved. Now, the fact of the matter is that I think from the perspective of the enemy country, they will not be able to sustain for more than 3-4 days. So it's a question of how big the escalation happens and how India retaliates. So I think all this is in the air now, very tough for us to evaluate what exactly is going to happen. But I think things will be much clearer a week from now. That's my guess.
Right, okay, that's the take coming in right now on the overall market. But Sandeep, if we were to fall further from here, other than Asian Paints, which we discussed, where else would you look to perhaps add fresh positions, or even where you think that, there are opportunities and there is an oversold move in some of these select few sectors or stocks, if you will? Are you seeing any such opportunities?
Are they on the large cap side, companies which have been delivering where and which are outperforming companies like M&M, Reliance, ICICI Bank, L&T, all these kind of companies, or Bharti Airtels, all these on the large cap side, all of them should be on the lookout to buy on declines and initially get into large caps, and then as the situation stabilizes, look at mid caps.
On Reliance, it's seeing a little bit of a cool off. There's of course L&T as well, which also hasn't really moved much at all in this April recovery which the market saw. M&M, of course, Bharti, some of these stocks have really been those leadership names, no taking away from that. But Kunal, let's analyze some of these charts and let's pick up on Reliance, or for that matter even Asian Paints. Do you think these can be bought at these levels?
Well, Reliance, of course, can be bought at current levels. Of course, the only caveat is that we don't see any major news flow surrounding the markets, as well as a further spike in the India VIX. That is the only concern which the markets could probably get, because a further rise in the VIX could probably lead to an immediate pause in the trend for many of the stocks. Coming to Reliance, I think largely with the stock holding on to that 1400 levels, trading just about that 1400 mark on the back of higher volumes uptrend for Reliance earlier. The stock was almost at 1100. To move from 1100 to 1400 mark for the stock in just a matter of 1 month, and then staying above those levels, I think is a very strong indication that we've seen a potential change of trend for Reliance Industries. The 200 DMA still remains to be a key support for the stock. Asian Paints, on the other hand, the stock was seeing a bit of recovery from 2100, 2150 odd mark, which was the support for Asian Paints. The stock moved towards 2400, 2450 levels, and then now it's gradually come back towards the 50-day moving average. The concern, of course, is that if the stock breaks below the 50-day moving average, which is at 2280 levels for the stock, you might see maybe a bit of a short-term correction further. But largely on the long-term charts, on the monthly charts, etc., we are looking at a strong base building formation, which has already happened for Asian Paints. So it's a matter of time that the stock would get back into a very steady kind of a recovery. So far, because of the volatility of the markets, even this stock is at the base of a correction.
I want to bring up L&T because it's due to report its numbers. We're anticipating the Q4 order wins between about 80,000 to 1 lakh odd crore rupees. But I think the visibility, the commentary from L&T is going to be extremely critical this time. Sandeep, since you do track L&T pretty closely, wanted to understand whether you think L&T could be susceptible to any global risks, because some part of their revenue does come from global operations.
So the global risks have not increased in any way over the last few weeks. If at all, there have been talks to de-escalate, and the tariff situation, the talks are going on, and things are not worse than what they were a few weeks back. So I think I don't see any impact of that per se on L&T.
About L&T, given the fact that the stock will, or the company will be coming out with their earnings later today, or rather just after market hours. But let's take a look at what the markets are doing over the last few minutes or so. You have the broader markets that have seen a sharper fall when you compare it to the benchmark indices. No doubt we are 8% down on the Nifty, but it is a mid-cap index that's down in excess of about 2.5% or so, 2.3% downtick for mid-cap index. Small-cap index also weighing heavy at this point in time, given the fact the statements that are coming in from Defense Ministry, from the US Consulate General in Pakistan, as well as some commentary coming in from the neighboring nation as well. So that's weighing heavy on the markets. Let's take a look at what Escorts Kubota is doing at this point in time, given the fact that they came out with their earnings a short while ago. And let's take a look at what the earnings are looking like for that one, as I believe that the numbers are actually a bit better than expected. That is the Escorts Kubota consolidated numbers. Yes, they're better than estimated, but the stock is also now declining given the fact that the rest of the market is declining. But on that note, thank you so much, Sandeep and Kunal, for being a part of the show and talking about the markets and the strategy going ahead. Let's take it across to Snehi to take us through the closing. Snehi?
Well, absolutely. Let's take a look at how the market has closed in today's trading session. We've had recent updates coming in from our defense ministry, and on the basis of everything that we said, the market has taken a sharp knock in today's trade. 0.8% lower, currently around the 24,200 mark. A 200-point drop coming in on the spot basis, and more than 350 points drop coming in from the day's highest point. Let's take a look at what Sensex is doing. 0.7% cut coming in on the Sensex as well, struggling to hold on to the 80,200 mark also right now. Very sharp knock coming in on the Sensex also. Advanced decline ratio, no doubt, of course, very quickly has tilted in the favor of the declines today. India VIX, very important metric to talk about right now. A 13% uptick coming in on India VIX, indicating the volatility that has ensued in the market following everything that we've been hearing from the defense ministry as of now. Nifty Bank to 0.8% lower in trade, so that's what the market is looking like. Bigger and sharper knocks coming in on the broader end of the market today. Let's pull up the Nifty mid cap because that is lower by almost 2.5% as we speak. Nifty small cap also lower by 2% or thereabout in today's trade. 1.8% cut on the small cap index to right now. HCL Tech, Axis Bank, Kotak Bank, Titan, some of the handful of the names that have managed to hold on to the green in today's trade. On the flip side, deep pressure coming in on Shriram Finance, Eternal, M&M, Adani Enterprises, Hindalco. Just want to quickly take a look at what the defense stocks are doing in today's trading session. Let's pull up something like an HAL or a BEL, BHEL, and take a look at everything that's happening. Hindalco, that's the metal stock. Let's talk about defense stocks right now. BEL currently lower by 1.5%. Also HAL also a 1.5% cut coming in on that stock. Let's pull up Cochin Shipyard. Now, Mascot Rocks are holding in the green right now. Normally Garden reaches down 1% as we speak, and Cochin Shipyard also a 1% cut coming in. So that's what the defense end of the market is looking like right now. Sectorally, at one point of the trading day, only a couple of sectors were in the green, but in the red, but that has flipped right now. You only have media and IT to whatever little extent holding on to gains coming in on the green. On the flip side, Nifty Realty, biggest loser, a 3% cut coming in over there just on an intraday basis, followed by Nifty Metal, Auto, Energy, Pharma, PSU Banks, and Nifty FMCG, and Nifty Bank, of course, joining that list of losing sectors in today's trading session. Some stocks to talk about. First up on the earnings front, Asian Paints is a stock to watch out for. Numbers looking slightly better than what the street had expected. There has been a hint of a recovery as well, but nonetheless market pressure, and Asian Paints has subdued to has given into that. A 1.5% cut coming in on Asian Paints. Let's talk about Esco Kubota, also another earnings candidate, largely better than what the street was expecting. Those were the numbers coming in, but market pressure visible over there as well. Bharat Forge in line with the street estimates, but lower on a year-on-year basis. So that stock took a dip when those numbers came out, and 2.3% lower is where that stock is. Symphony on the flip side, strong set of numbers, and that stock was up 9 or 10% ever since the get-go. Let's see what this impact has done. Not much to Symphony, because still a 7% gain is where the stock is sustaining at right now. Canara Bank too was an earnings candidate, followed by Tata Chemicals, and Uno Minda on the positive news flow of capacity expansion. A handful of stocks that were in focus today. Lots of stocks, but we could highlight all of this as of now. And Nifty, a 1% cut. The sell-off has intensified. 24,150 levels is where we are seeing Nifty right now. We'll give the rate some time to settle, but that's what today's day has been. A 1% knock is what we have seen on the Nifty 50.